Great. I think we can start now. Thank you very much for joining us. We are very excited with the launch of the ASEAN State of Market Report in collaboration with HSBC yet again. The numbers sound exciting, and without much ado, what I would like to do is introduce and invite my colleague Miguel to walk you through and give you an overview of the State of Market Report and the numbers before we go into the panel discussion. Miguel, thank you.
Yes, hello everyone, good day, and thank you very much for tuning in. My name is Miguel Almeida. I'm a research manager at Climate Bonds and the lead author of the ASEAN Sustainable Finance State of the Market 2022 reports, along with my colleague CX. And I'll give a summary today of our research paper. It is, as Alina said, produced in partnership with HSBC, and it is the fifth one that Climate Bonds has done for the ASEAN region. The report includes analysis of the market broken down by theme or segments, so green debts, which in the region includes bonds, loans, and sukuk, as well as social bonds, sustainability bonds, and performance-linked instruments, including sustainability-linked loans, SLLs, and sustainability-linked bonds, SLBs. And there are clear definitions of each instrument and our methodology in the reports. And I'll today focus on the data findings, which are largely based on i.e. the Climate Bonds database. I'll also mention a few key policy and market development initiatives at the end, but there is a lot more detail in the report, so please have a look at it. So first slide here, just presenting some summary figures for each theme broken down by 2022 versus cumulatively. Cumulative meaning, since the first bond was issued in respective markets up to the end of 2022. We see that green debts and SLLs are the largest segments by far, and had a similar level cumulatively and in 2022. So they're of a very comparable size, but sustainability bonds were not far behind in 2022. And that's looking at amount issued, which is the first row. On the second row, you've got number of issuers, which again, SLLs and green were similar in 2022, but green has considerably more cumulatively with 117 versus 77 for SLLs. And finally, social bonds and SLBs are much smaller markets in the region, that is clear. Also, just to give an overview of the types of instruments used in the markets, which is not actually shown here, but to give an overview, loans remain the most popular debt instruments in ASEAN's markets. SLLs are comfortably at the top, and also within the green theme, green loans actually exceed green bonds and sukuk. And again, within the green theme, we see loans dominating in most countries, including Singapore, which is by far the largest market, while sukuk dominates in Indonesia and Malaysia, as these countries try to position themselves as leaders in Islamic sustainable finance. And within the social and sustainability themes, we don't track loans. Here, just to show the yearly progression for each theme. So the volume of ASEAN's thematic debt reached $36 billion in 2022, which is a 32% contraction against 2021. And this was actually the first year-on-year drop we observed, but volume stayed relatively robust at almost twice the level of 2020. And it's a decrease which followed a very strong 2021, as you can see on the charts, but also reflected, importantly, adverse global market conditions, namely rising inflation and interest rates, which negatively impacted capital markets activity around the world. So there is a valid reason for the lower volume, which was observed globally. It's not just limited to ASEAN. And our global State of the Market report actually covers this, it was recently released. But nevertheless, there were still several positives for ASEAN. One aspect is the market is becoming more diversified. For example, the first sovereigns from Singapore and Philippines were issued in 2022. We also saw the first SLL from Vietnam. And more broadly, we saw continued strong sovereign issuance from several countries. ASEAN and Latin America are actually the regions with highest relative share of sovereign volumes, which is really positive. And for green debt specifically, we saw lower volumes in 2022, but Malaysia was the only country without issuance there. And finally, there was also a range of policy and market development work that we feel is really important and positions the region well for the future in terms of transition and sustainable finance, including, of course, the issuance of thematic debt. I'll talk more about those points at the end. In terms of countries, Singapore remains the clear leader, and this is driven by SLLs and green debts, including both loans and bonds. Most countries, as you can also see here, saw issuance drop in 2022. The exceptions were Philippines and Indonesia, supported by the sovereigns that came to the market there. You also can't see it on this chart, but the country ranking does vary by theme. For example, Thailand has the highest volume of sustainability and social debts cumulatively, while Philippines was top in sustainability bond issuance in 2022 because of its sovereign. In terms of SLLs, Singapore really dominates heavily, but Indonesia grew the most in 2022. And we saw the first SLL from Vietnam, as I mentioned. So going forward, we of course expect growing diversification across ASEAN member states, and maybe over time, a gradual closing of the gap between Singapore and the rest. Here we have analysis of issuer types for each theme. Again, broken out into 2022 versus cumulatively. The key points that I'd like to highlight are the low share of corporates in 2022 green bond issuance versus the cumulative level, while for social and sustainability bonds and green sukuk, these were really dominated, they have been dominated by sovereigns. Within sustainability linked instruments, of course, these are more for corporates, at least for now, so corporates dominate there. And sovereign issuance, which is orange in the charts, was remained robust in 2022. So this was the most resilient of all issuer types in the region. And given adverse market conditions, which we observed during the year, governments do tend to be one of the least likely issuer types to be affected, especially when neighboring or peer countries are showing leadership. And this is actually a trend that seems to be present in ASEAN. And the volume of sovereign issuance is really concentrated in sustainability bonds as governments raise funds for a combination of green and social projects. By contrast, as I mentioned, corporate issuance actually fell drastically in 2022, more than in most other regions, probably just as a result of companies trying to wait for better conditions and better interest rates. Interestingly, in ASEAN, non-financials have dominated among corporate green bonds and loans, while among corporate sustainability bonds, these have primarily been issued by financial institutions. And there's no clear reason for this difference. I don't think we really see it in other regions. So maybe, as the market grows, this will even out. In terms of currencies, so the chart here is actually just for green. Generally, as markets develop, especially in emerging markets, we expect local currency issuance to grow. And this is a positive sign. It suggests that domestic markets are becoming more developed and local and regional investors are playing a larger role. So for green debt, 2022 was marked by a lower share of hard and foreign currency denominations, especially the USD, which accounted for a lower share of green debts in all countries in ASEAN, compared to the cumulative level, that is. We also saw barely any USD green debts issued during the year in Singapore, which is by far the region's largest market and tends to have a high share of USD issuance. Among social and sustainability bonds, this is a smaller market with less currency diversification and more broadly less maturity than green issuance. So we see fewer local and foreign currencies used there, and the latter is highly concentrated in USD, looking at the number of deals, but less so in terms of amount issued. And that's mainly due to the Philippine sustainability sovereign, which was issued denominated in Japanese yen. And finally, sustainability linked instruments. Generally, we see a high share of USD denomination there, but also fewer currencies used versus green debt instruments overall, despite the market being slightly larger. So the denomination currency-wise is more concentrated for sustainability linked instruments. The Singapore dollar is comfortably in second place among SLLs, given Singapore's large market, while the USD still dominates heavily in the country. But this contrasts with green debt issuance, where the Singapore dollar is top and USD is second. And the final chart I'd like to show is covers use of proceeds, so allocations for green debt instruments on a cumulative level. You can see the headline here is that proceeds in most countries are mainly allocated to energy projects, but buildings are top overall in the region. So ASEAN region is the far right column. And that's due to Singapore, where there is a lot of investment in green buildings. Indonesia has the most even split of proceeds allocations due to its sovereign deals, which finance projects in many categories. And going forward, we expect energy volumes to continue to grow, driven by heavier investment in decarbonizing energy systems. And this is supported by international policies and funding programs like the Energy Transition Mechanism and the Just Energy Transition Partnership, which we cover in the report. But to pick out on a category that we feel is underrepresented, transport is really one that's pretty small in ASEAN, where we feel there is still a large untapped potential. And a lot of that is likely to come through the public sector as governments invest in low carbon transport systems, especially in urban environments, of course. And just a note on our methodology, we do note that for most bonds, the allocations shown here are estimated at issuance based on the issuer's frameworks and external review documents. So we've only reviewed post-issuance allocations for a few bonds, namely those issued up to 2019. But by the way, in the report, we also covered allocations from sustainability bonds and social bonds, and those are all estimated based on disclosure at issuance. Finally, looking a bit beyond the data, what else did we see? Well, I think 2022 was a very active year actually for policy and market development. We saw a lot of initiatives, and these can kind of be grouped into the 5 types here. I'm sure other panelists will have an even better view on some of these, but firstly, want to highlight is taxonomies. So taxonomies are a definition or classification system to identify activities that meet specific eligibility criteria based on environmental or broader sustainability objectives. And we saw the first version of the ASEAN taxonomy, which was developed through the ASEAN taxonomy boards. That was released in late 2021. In 2022, we saw the consultation period of that going on. And in 2023, there has already been a second version released with more detail, including on technical screening criteria. We also saw continuation of national taxonomy developments, namely in Singapore, Thailand, Malaysia, and Indonesia. And, a note on these, given there are several, and this is true both in the region and globally, ensuring as much interoperability between different taxonomies is a key objective as much as possible. A second point is that we are observing enhanced building blocks for transition finance, credible transition finance to emerge. And that is driven both by regional and global developments that we feel will support the ASEAN sustainable finance market in general. For example, in late 2022, the first ASEAN sustainability-linked bond standards were launched. Here at Climate Bonds, we've also recently launched standard version 4, which has criteria for entity-level transitions and their associated financing, for example, through SLBs. And more broadly, there have been many developments on disclosure and reporting standards and rules around the world, which all of these and many more can contribute to the growth of credible transition finance. But one point we would also highlight is that in line with other regions like the UK and the EU, we would certainly like to see more prescriptive guidance from ASEAN policymakers on developing transition plans in ASEAN, including making these mandatory. And we've included several recommendations in the paper about this. So that is definitely an area to follow. Thirdly, we saw a range of broader policies implemented during the year in each country, and there is a full list in the reports. Perhaps two of the most interesting ones are the Energy Transition Mechanism and Just Energy Transition Partnership programs, which channel international funding and are really promising in helping to drive the transition of national energy systems, and these were launched in Indonesia and Vietnam. We also saw growth and diversification of sovereign issuance that I've mentioned before. We saw Singapore and Philippines becoming the first-time issuers, and continuing that is really really important. And finally, various other initiatives from other market participants, especially regulators and stock exchanges, who one of the main things they've done is enhance disclosure rules. And in Thailand and Singapore, actually, the stock exchanges are working on reporting platforms to centralize and make reporting more consistent. And this could be really transformational for the markets. So looking forward for 2023 and beyond, we expect a continuation of all these efforts. We expect more and better disclosure and generally a growing thematic market fueled by this and by supportive policy. Overall, I would just also mention that we all know we need ambition. We need to move swiftly on decarbonization, and maybe transitioning energy is where the most significant gains will be in this regards. And recent policies are really positive for this. It will be interesting to monitor the progress of the ETM and JTP programs and see if maybe they can get expanded to other countries. I hope this was a useful summary. As I said, there's plenty of other analysis in the reports, along with information on relevant initiatives and a discussion recommendation for potential future work. So check it out. And now I look forward to hearing what our great panel has to share. So over to you, Zelina.
Thanks a lot, Miguel. Thank you very much for joining us again. Thanks for the summary, Miguel. We were expecting to have Ashok from Indorama join us, but I'm afraid due to unforeseen circumstances, he's not been able to join us. But today we have a great panel. We have Commissioner Lee from the Philippines. We have Jonathan from HSBC, and Miguel will be supporting us as well and giving in terms of CBI's recommendations on areas of enhancement in this space. But without much ado, let me sort of start the panel conversation. It's interesting, when I started in ASEAN around sustainable finance, I started my career in this space in 2014. And at that point, sustainable finance was such a nascent issue. Very few people talked about it. And it suddenly fast-tracked all these years. And ASEAN is now sort of has made significant leaps and bounds. And I think this is very much due to the work of the regulators, the stock exchanges, the policy makers, the governments, and of course, the financial market as well. Collectively, everyone has sort of pulled together and sort of tried to make this a priority in ASEAN. On that note, I think, Commissioner Lee, thank you for joining us yet again. We would love to hear your views in terms of, I mean, as Miguel has said, I think one of the key drivers we've seen in the ASEAN landscape is the work that the regulators have done collectively and individually in each of your countries to push this agenda of mainstreaming sustainable finance. Could you just give us an overview on what are the current plans ACMF is looking at, or all the other regulatory bodies are looking at from an ASEAN context on how to further enhance the market?
Okay, sure, Zelina. Thank you for that question. As a quick background, just in case those, although I'm presuming everyone here knows what the ACMF is, it's the ASEAN Capital Markets Forum. So it's like a little, I like to term it as a little UN at the ASEAN level for securities regulators. So we meet regularly 4 times a year to discuss different initiatives that we can apply within ASEAN through with our constituents, so meaning our regulatees. So represented there obviously are the 10 ASEAN states. And a lot of our work there now is focused on sustainable finance. And in fact, if you have been keeping track of some of the things we've been doing the last couple of years, we've issued the publication of the ASEAN Sustainable Capital Markets ACMF roadmap. And based on that roadmap, we've issued a suite of ASEAN bond standards, particularly the ASEAN Green Bonds, the ASEAN Social Bonds, the ASEAN Sustainability Bonds standards. Just last year, we issued in Cambodia the ASEAN Sustainability Linked Bond Standards. And as I understand it, we're currently prioritizing, because we have a seat that we are very involved in the ASEAN Taxonomy Board, which is the one drafting and creating the ASEAN Taxonomy, which is currently on version 2. I in fact sit on that as a board member of the ASEAN Taxonomy. So there's a lot of work here. In fact, as Miguel mentioned, we transition standards is also something people are looking at, and we are in fact also exploring that. There's a lot to do, no? And when it comes to the transition side of things, like the ASEAN taxonomy, we're looking at it as a living document, something that can be adjusted as time moves on. Some of the areas we're trying to encourage now, and what we might be looking at perhaps would be perhaps voluntary carbon market work. We're also looking at creating more engagement with the ISSB. What else about? We're also looking to encourage more issuances of GSS and sustainability-linked bonds within our respective jurisdictions in ASEAN. But perhaps one thing you might be more interested in would be the fact that we are definitely looking at working on transition. I think I mentioned that already. No, I just realized now, the transition standards, there might be some more outsized focus on that moving forward among the regulators. I mean, it is the logical next step, no? In fact, the way the ASEAN taxonomy is worded now, the version 2, precisely why we have the traffic light system for that, and why we have the different colors, the amber among others, is precisely to encourage and allow for transition. But anyway, I'll stop there. Hey, bottom line, there is a lot being done, and there's a lot of focus here among the ASEAN regulators in this space. No, I'll stop there. I'm sorry. Otherwise, go ahead, please.
It's all right, Commissioner Lee. Thank you so much. I'm going to come back to transition because I think clearly from the numbers Miguel has been sharing, SLBs, SLLs are sort of the new trend in the market and seems to be getting much sort of traction. I'm going to bring Jonathan in now. Hi, Jonathan. Jonathan is the head of Global Banking Sustainability for Asia Pac for HSBC. And Jonathan, as sort of like we've seen what the regulators are doing, could you share from your point of view, from a HSBC point of view, in terms of what kind of developments that the bank is doing to push the agenda in the bond market, the capital market side, and also the banking side, please?
Selena, thank you. Before I do that, I'd just like to reinforce the shout out that you gave for progress in the markets in that period, since you, like I think got involved in this back in sort of pre-Paris in 2015, and in that period in ASEAN, it's impossible to overstate the contribution, particularly of the SEC in the Philippines. And Kelvin and his team and his colleagues and predecessors have really been at the forefront of driving this and creating regulations which many often see as something that sort of control or constrain a market, but actually in the ASEAN context were hugely important signals to issuers that we want you to go out and issue. So absolutely aligned with the work that we were doing in trying to encourage issuers to get out there, build these markets, and really through their sustainable transaction issuance, sort of really use that to establish a platform for communicating how important their support and their commitment to the transition is. And of course, that needs to be done in a robust and well-organized way, which again is where the regulators come in. And that's really a sort of a lead in to try to sort of answer your question as to sort of where are we now and how are we now trying to sort of take this to the next stage. So it's really building on all of that early work. And I was interested, Miguel quite rightly in his comments up front talked about, we think there should be sort of mandatory requirements for entities to produce and publish transition plans. Now, that's something that we are acutely focused on, and our message to our clients and to prospective clients is if you want best access to capital markets, including access to our balance sheet and including our support to help you access the wider institutional market in all its forms, you really need to have, and in certain cases, as you can see in some of the specific policies that we've issued in some of those more sensitive high carbon and energy sectors, you have to have a transition plan. So this is very much now, I think, the focus of how we're trying to take this to the next stage. So that's that sort of communication of intent using the label product markets. Now we're seeing those develop, the standards increasing, and I'm sure you'll come back to, how do we, address the challenges of greenwashing and setting ambitious targets in the sustainability linked variants, but fundamentally around client selection. A big piece of work that we're working on is really looking and trying to make sure that we understand our clients' plans, because that's critical to us understanding the risks that we face as counterparties to them, critical to our understanding of whether they're likely to be winners or losers as we go through this sort of transition from unsustainable to sustainable, and hence, really, is this a client we want to be putting a lot of effort into building a relationship and delivering capital solutions for them, and of course, fundamentally as well, an understanding of where they're investing and consequently where they need financial support. So for us, it's a huge part of our overall origination efforts. It's not just about risk management; it aligns to originating new business. And then we come on to have this discussion: where does sustainable debt fit in that? Sustainable debt doesn't fit for everyone, but it's absolutely an opportunity for those who do have strong plans to go out and communicate those effectively to their stakeholders as part of that overall objective. So it's really understanding clients through understanding transition, and having the financial products and services on the other hand to then support those clients in their endeavors. And that's how we build what we hope is ensure the resilience and growth and sustainable growth within our business.
Thank you, Jonathan. I think based on what Commissioner Lee has said and what you have said, a lot of work has been done. But if you look at the numbers relative to the total bond size in ASEAN, or even the loan book, sustainability linked issuances are minute relative to that. It's growing, but relatively we're still small. And so that brings us to the question of what are the challenges? Commissioner Lee, I'm so sorry, but you're going to have to take this one for all the regulators. And I ask you this question with a heavy heart because I was with the regulator and I know how difficult the question is. Why aren't the regulators making these requirements mandatory?
I'll be blunt, because the pushback will be so difficult that I don't think anyone will even bother issuing. The challenge sometimes when you come up with these regulations, and we want to have some of these regulations for issuances be more encouraging. So you want to deal with the balance of making it not restrictive, to make it strong enough to encourage the issuer to come in, yet at the same time not too strict that they will just choose not to do it entirely. So going mandatory, in fact, I'm actually a very strong advocate of going mandatory, for instance, in relation to disclosures. But that is something I have been advised here by staff, at least in the Philippines. No, I've been advised by staff to take it slowly, in particular because there are our constituents, meaning our regulatees, are not necessarily as advanced as, for instance, the regulatees or the constituents that are in Singapore. So there is a challenge. No, after all, everyone is starting off on a different starting point. No, there are different levels of readiness, different levels of capability. So it's hard to just one time, big time, shoot everyone with a mandatory requirement and expect everyone to do it. Because bluntly speaking, it is unlikely that everyone will be able to do it. In fact, one of the challenges I'm dealing with now, when I was encouraging a group of issuers to come up with as background, we just recently launched, we're about to launch, our sustainability-linked bond standards, which is aligned with the ASEAN Sustainability-linked bond standards of ASEAN. The Philippines is about to roll that out in relation to that here in the Philippines. And I have been told when I was going around informally encouraging some of the issuers to do it, they keep coming back to me that there aren't even enough verifiers and you're going to make us do this. So, and of course, I know there are verifiers out there, but once again, I'm going to be blunt. Verifiers are expensive. And a lot of the issuers here in the Philippines might not be able to carry that cost currently, or at least are not quite willing. No, so as I said, balancing the two is very hard. We thread a very, very fine line. We want to encourage, but we don't want to just upchuck the whole thing and stop it entirely, by being too restrictive. So I guess that's the basic answer I can give you currently. There are other answers, but I'm not sure I can share it publicly. So
All right. But Commissioner Lee, it's sad to see that 2030 is around the corner and we're still using the word encourage. In many conversations I've had with the financial sector, and I'm going to come to you now, Jonathan, with a difficult question as well, that the question of incentives, how are you going to support us to make this shift? And I really struggle with that question because I think the numbers are there, the facts are there. I don't understand why we still need to encourage or we need to incentivize. But a small suggestion, Commissioner Lee, staggered mandatory implementations. The larger bonds who can afford the verifiers, make it mandatory for them. Just a small recommendation. Jonathan, I was listening to you talk about how you want to understand clients' plans and stuff like that. But I think all financial institutions will always face a struggle between ensuring credibility and yet maintaining financial viability. You still have, at the end of the day, a P&L still matters. And I don't think both this, making sure there's credibility, and financial viability, I think these two things are not usually complementary. How do you sort of address that kind of issue?
Well, I see it a little bit differently, Selena. I think in the majority of cases, they are complementary, and good sustainability practices align to good financial performance and outcomes. There are some cases, but I think it's a minority of cases where there might be a conflict between the two. But I think in the vast majority of cases, there's alignment and there is increasing recognition of that. So we have to deal with whether there might be a conflict. But, we are positioning our business, as I described, in the way we look at clients, the way we're setting our targets for financed emissions. We are positioning our business to, support through the transition process. So we are, moving our book, moving our efforts to those clients who, in our estimate, are, have that ambition that aligns to ours and are taking the actions in the near term and have the longer term plans to, develop the rest of their plan and manage that, particularly recognizing, the high levels of uncertainty there are in certain areas as to exactly how the transition may happen. In some areas, we know where the technologies are and we can push and drive those. In others, we don't. And so in our sort of almost next evolution of thinking around sort of transition plans, we're looking now to sort of really dive into an individual transition plan and look at the different components. What's viable today, and that we should be doing, and we'd be expecting the client to do it. And most of our clients are very good clients, very strong clients. We're very proud of our client set and client relationships we build. They're making those investments. Others, the transition piece may well be dependent upon some change in the economics of a particular application of a particular taxonomy. Other transition components may be dependent upon the emergence of technologies that aren't in any sense commercialized today. So we have to sort of, look at all of those, understand the plan, and understanding that plan enables us, we believe, to better price and allocate our capital. But good sustainability is leading, in the vast majority of cases, totally aligned to financial performance. And I think we see that increasingly. That's not just our assessment. We're seeing that increasingly on the buy side from the institutional markets more broadly.
Great, thank you, Jonathan. I think the one thing that came to mind when I was looking at climate bonds as bond standards of 4.0 in terms of where we're introducing entity certification, and one of the requirements goes down to disclosures. I find, in my experience, when I was working in the ASEAN markets, scope 1, scope 2, scope 3. How do we manage, how do we gather data, and especially in the scope 3 space? And this is always going to be a challenge, even when you're developing transition plans and developing KPIs and SPTs. Miguel, if I could bring you into the conversation in terms of your views around data, the infrastructure, and then if you could sort of weigh in on what Commissioner Lee said about disclosures as well, if you could elaborate a little bit on both, please.
Yeah, big questions, important questions, I think. I mean, for me, you know, I think we all understand the power of disclosure. I've become more involved in the topic, and I really see it as a potential game changer, because ultimately you can't do anything without measuring impacts, right? So we're talking about impact reporting in order to manage impacts and improve those impacts. I think there have been many interesting developments globally. So as you said, focusing on GHG emissions reporting would be definitely a recommendation, even if other impacts, which might be more complex to report, cannot. National policymakers, stock exchanges, everyone really should be looking at introducing mandatory GHG emissions reporting. And it's been a very promising space recently, because there's a lot of developments globally. As I said, Commissioner Lee also touched on the ISSB formation, which can really help to bring standardization in different jurisdictions in terms of reporting. And for me, also a very interesting development is the greater availability of platforms where entities can go and report through them, instead of just having to produce standalone reports which lack consistency, etc. So one key topic that I'd like to leave everyone with is centralizing reporting and making it more consistent. And actually, the experience in ASEAN has been really positive for this recently. As I mentioned, in Singapore, for example, the stock exchange has more granular rules for impact reporting for listed entities, and is developing several tools to help issuers actually do that. So when that happens, I think everything else will fall into place. You know, you will have information on which impacts are the most important in each region. You will have users and mainly investors being able to compare bonds and compare entities and allocate accordingly, and a range of policies that you could also develop. Also helping, you know, we've talked about performance-linked instruments and the importance there of measuring the impact and the impact that has on the bond structure and the coupon rate. So it will help with all of this, and I think ASEAN is very well positioned for it.
Thanks a lot, Miguel. Now, before I move to my favorite topic of transition, Jonathan, I have a question from the audience for you. It goes, why hasn't HSBC done $1 trillion of thematic bonds in Asia yet? Surely, if anyone can do it.
Yeah, look, I think the answer to this really goes back to sort of what I was raising earlier. I mean, our ambition is really to be talking to all of our clients about how they are addressing the challenges in their businesses, and that's both the impact on their business and also how their business impacts others. So the sort of the externalities, how they are seeking to address that. And we want to be the bank that's bringing them the financial solutions. Now, the reason I think perhaps but what we don't want to be doing is we don't want to be selling green bonds or sustainability linked bonds to issuers to whom it's not appropriate. We want to be selling them to clients, or not selling them. We want to be helping a client. We have a discussion with a client. We say, is this going to support your approach to market? So they need to be a credible issuer. They need to have a credible plan or credible use of proceeds or credible targets if they're going for the SLB. And then we're thinking about how's that going to impact the investors. And those, if we come to an agreement with the client, we're all aligned that it makes sense to do it, we've got the ingredients, then we'll take those clients to market. But there are other clients where we might say to the client, you know, you're in a really tough sector here and you're making a lot of progress, but it might be controversial to use a labeled product. But what we're absolutely doing with that client is we're saying, notwithstanding that we're not recommending or we're agreeing with them not to use the label product, we're absolutely looking to deliver them the capital to enable them to progress the transition as they have it defined today. So I think, and this is where it's very important, I think, the work that, and why we're so, want to do so much work with you at the CBI, because in a sense, you're helping to validate the credibility of stories, or stories as perhaps its approaches, that to help those get positive reception in the market. Because the last thing you want to do is to push a client to do something that they're not ready for, they haven't thought through their targets, they're not covered enough of their scopes, to your earlier point, and then there's criticism, because then it becomes a whole distraction actually from their transition efforts. So this is not, for us, this is not just a simple chase to raise as much labeled product as possible. It's actually supporting the clients with the financing needs to affect the transition. And of course, statement of the obvious, that transition happens in the physical world. It doesn't happen in the world of finance. It happens in the physical world as those clients transition. So, that's not, we often, people might talk about volumes, and it's a metric, but it's only a part of what we really should be driving. And I think that's the answer to the question. We want to ultimately make sure that all of the business we write is being written in support of the transition and the global objectives. But that, I don't think we'll ever get to the point where we'll be saying, well, it's all labeled green.
Yeah, no, I think that's a very fair point, Jonathan. Essentially what we're talking about the real economic players, right? So the financial sector can be ready. The regulators can set up the regulatory framework to enable private sector financing. But how are we moving the real sector players? What kind of support are they having? So, I mean, ASEAN, just like other sort of other regions we're talking about, like LATAM and Central Asia and stuff. One of the issues has always been the lack of viable pipeline of issuers. So if I could bring that question to you, Commissioner Lee, besides setting up the regulatory framework, how are the regulators, or how are you engaging with policymakers in the various governments or at ASEAN level? How are we bringing along the real economy along with this journey with the financial sector, in terms of how are we supporting issuers to sort of step up as well?
Okay. Well, at least here, at least in the Philippines, we have not a formal one. We kind of have an informal campaign to encourage some of the issuers to move in that direction, to issue, for instance, a green bond, to issue a sustainability-linked bond. For instance, my constituents know that I'd be very happy if any of them come up with their own bond that's either GSS or as an SLB, and they know that that would effectively put them on my radar. And well, it's always a good thing to have a regulator happy with that particular regulatee. I understand within ASEAN there are a number of policies. It's not a formal ASEAN-wide like the green bonds framework, for instance. But I understand that different jurisdictions have allowed, for instance, for reduced filing fees in relation to if it's a green bond. Here, we're working on coming up with a zero filing fee policy when it comes to GSS and SLBs and blue bonds. Now, I haven't rolled that out yet, but it is something we're working on. We're just trying to check the ramifications in relation to our securities regulation code, which is our binding law in relation to securities. I understand Thailand has a discount system when it comes to GSS bonds, if I recall correctly. Malaysia has something similar. I just don't remember the exact specifics of it. But I guess, although I don't really like the word incentive, to be honest. But I guess it's in a way, regulators are trying to incentivize. I go back to the point, encouraging our issuers to go in the direction of GSS, SLBs, and other such bonds. So that might be something that would interest the general public to know. There are efforts, at least at the regulators level, not even necessarily coordinated or among the different ASEAN regulators to make things a little easier incentive-wise, discounts among other things. So maybe I could end there. I think considering that I expound any further, I'm just going to eat up everyone else's time. So
okay, thank you, Commissioner Lee. We have another question from the floor, and I'm just going to open it to all three of you. So the question is, I think most of our discussion has been around climate mitigation. So the question is the private sector or is the looking at financing or funding adaptation programs? Is this something that is an area that we will be moving towards? Open to anyone to sort of respond.
I'm happy to kick off, Selena. I think absolutely yes. I mean, it's a long established adaptations, a long established sort of bona fide category for the use of proceeds, transactions, bond market, and loan market. I think the implication within the question that there's probably an ever increasing realization that there's much more adaptation to be dealt with, because regrettably we have not been very successful as a global society in mitigating, in reducing carbon emissions, talking specifically of the climate aspect, and therefore there now needs to be focus on adaptation. And we're seeing the data is coming through, and we're seeing this from all areas, whether it's from the provision of capital to the management of risk in the insurance industry. The models and the analysis are showing that there are real costs ahead. Some are going to be unavoidable, but there are some really important adaptation opportunities to abate the expected impact of those adverse costs. So certainly in our client dialogues, and particularly particularly across real estate sector, built environment, it's a very big issue now as to sort of how can we help clients fund making their assets more resilient, but also helping think about how can they both identify those physical risks in their supply chain, or even downstream in their customers, as they think as to how they reposition their business. So the assets owned by others that are critical, or the failure of which will impact on their business. And it's not just building owners, it's across industrials, it's across infrastructure, it's really across all sectors now that the prominence is growing, and the readiness to deliver capital is absolutely there.
Great, thank you very much, Jonathan. And now we have a little bit of time, and I would like to talk about transition for a minute. Commissioner Lee, is there anything that you could share in terms of aspirations of what the regulators are looking in the space of transition finance going forward?
Well, I can say that it's an area we're looking at least at the ACMF level. Now, I go back to the point I made earlier with relation to the ASEAN taxonomy, precisely why the foundation frameworks and the plus standards are using color-coded classification systems, green, amber, red, is precisely why the amber classification is there in the first place. No, it's to denote and categorize transitional activities. So we're giving due consideration to the practicalities of implementing sustainable activities in a transitional basis. What are our expectations? Well, frankly, it might be a little too early for me to expound on what are the disclosure guidelines, transition disclosure guidelines, or transition finance guidelines that we're looking at, because as I mentioned, we are still in the initial stages of working on it as a ASEAN regulator. But I can share that we're not really looking at narrow sector pathways in this particular exercise. We're looking to create more consistency. We also want to seek to engage stakeholders and principals. I guess we're continuing to study this further. We want to develop this further. I think I can end there, lest I say too much again.
No worries, Commissioner Lee. Jonathan, if I could bring you into this. So the key thing about SLBs and SLLs, I think the exciting thing that we find is the step up and step down. I think that's a real game changer, in my opinion. Based on your experience, what has the issuers' reaction been to this? How have they dealt with setting up the KPIs, and how do they deal with things like step downs and step ups?
Yeah, I mean, there's also some different bits of the market to talk about there, because you referenced both the bonds and the loans, and I'm going to have to try to be very careful not to upset Commissioner Lee and use the word incentives, because I heard very clearly he doesn't like it. But we do think that the structures are very valid. You made the point, Selina, if we talk about the bond market, to date, it's been a relatively small part of the market, but we think the product, it's not going to be right for everyone, but there are clients who can do it. It can be very good for them, very good for the market, where they have set relevant and ambitious targets, and they want to communicate their commitment to those by exposing themselves, let's say, to an element of, let's use the opposite of the incentive to keep Commissioner Lee calm, a penalty. They want to expose themselves to a penalty as a demonstration of that they're really committed to meet that target. But really, and there's been quite a lot of talk in the market that I think has been confusing around the sizing of these, because really to us, it's not actually about the monetary point. It's about the reputational exposure that the client is exposing them to by putting these targets out there. And that's something we should encourage people to set ambitious targets and to put their reputations on the line. We don't want, as some people I think inappropriately have suggested, to be creating financial structures where the investor makes a windfall profit because the entity into which they've invested fails to meet a target. So that's why I think the sizing of these elements in the transaction payout structures is about right, because it's really it's the reputational risk that is key. So for clients who've got those targets willing to do that, I think the product can be very useful, and the product is a way that it is encouraging them to set and put out targets that they may not have previously done. Obviously, targets come with extra disclosure, back to your earlier point and Miguel's point. So that's all very positive to us. Now, we haven't seen in that market, we've seen mostly step ups, and we've really only seen the step down in really one main case in the sovereign space, of course, with the issuance out of Uruguay. And we think that's very interesting and appropriate that a sovereign would say to investors, when I de-risk by meeting my targets, you should recognize that and say, well, my credit profile has improved. You tell me there are all of these risks. And we have this conversation, of course, with our prudential regulators. So I'll leave Commissioner Lee alone for the moment, but talking about prudential regulators. So you keep telling us there's risk, Mr. Regulator, but you don't approve our models when we say we want to have less capital where we think we've managed that risk. So there's an area where on the loan side with prudential regulators, I think there's a lot of progress to be made. And I'm not at all being dismissive of the efforts of regulators, because they're absolutely huge, but that's something we need, I think, to see more of going forward. And the EBA have been leading on that. I think we need to bring more of that into into Asia, into ASEAN, as Miguel suggested. And the final point, just to say something on loans. So step up, step downs in bonds. I think step up, it's sort of easier for the market to price those, because actually you're not really pricing the step up. You're actually pricing the risk and the willingness of the client to take the reputational risk. In the loan space, and I don't think we'll see too many step downs, because that's very difficult for the investor to price that into the facility. So you can get some, I don't think it's with too many of those in the corporate space, because I don't think they'll necessarily price too efficiently. Now in the loan space, it's very different, because loans will be shorter term instruments, and this is where the borrower can engage with its lender or lenders, and there's much more flexibility to create structures that are bespoke, which are measured periodically, principally because of the shorter term nature, obviously, of those facilities, and so many of them are and will be refinanced. We have obviously more term loan financing from banks in Asia and in ASEAN than we would have in Europe, where obviously the banks have been much disintermediated to a much greater extent. So you have those very large, short-dated revolvers that, you know, the European or North American corporates would utilize. So step up, step down, absolutely, we see that increasingly in the loan space, and we often have this debate as to whether does it matter that you have sort of symmetry? It's nice to have, but of course, avoiding a step up is, in financial terms, is actually no different an outcome from achieving a step down. There's a reputational difference, but in financial terms, it's still that, to use your word, it's that reward or penalty. So I think that's sort of where we are on those structures of putting a financial consequence or financial payout into financial products to sort of recognize the linkage between good sustainability performance and improved risk.
Great, thanks, Jonathan. I can see Commissioner Lee's wanting to respond to this now.
No, yeah, I'm so sorry. And Jonathan, I hope you'll indulge me. I just had to comment on the incentives remark earlier. Please don't misconstrue that and to mean that I don't like incentives as a whole. No, the challenge I have with incentives is that as a regulator, there are limits to the authority and power given to me by law. For instance, the number one incentive I keep getting asked about is tax breaks. That's clearly beyond my purview, clearly beyond my powers, which is why I am not that comfortable encouraging incentives, precisely because I don't even have the power to issue those kinds of incentives. I do, however, see the point of how incentives can help encourage the market to get in. But since I typically don't have such powers, I generally try to go in the direction of, well, it is the right thing to do. Why not go in this direction anyway? But obviously that's sometimes not enough encouragement, if you know what I mean. And I'll stop there. Sorry. Thank you for taking
Not at all, Commissioner Lee. So again, I think key things that I wanted to sort of highlight, but clearly we don't have time to discuss this for another discussion on another day. Jonathan, you said three interesting things that I think is definitely something we should delve into: prudential regulations, reputational reasons as why issuers come to the bond market, and local currency investors. Where are they in this space? But on that note, I have 1 minute left. And so if everyone can give me their closing remarks, if I can start with Miguel, Commissioner Lee, and then end with Jonathan, please.
Sure, thank you. Three things I would highlight, just looking ahead, what I think are really important things. One is data and disclosure. We already talked about that, improving the availability of information and the quality and consistency of it. It's something that supports everything else, all the other work we need to do. Transition plans and making them mandatory. It will also help with structuring SLBs, and I wonder even SLLs, if there is certain rules that can be added by linking the issuance of performance-linked instruments, whatever they are, to the transition plan of the issuer, and obviously focusing on the heavier polluting sectors and the most polluting companies. And thirdly, like transitioning energy systems, I think that's where the more important gains will be, and it supports decarbonization in other industries. So those are my key points.
Thanks, Miguel. Commissioner Lee.
Well, very quickly, I guess I don't want to expand it as much as Miguel did, but I just like to point out that the regulators are trying to do the right thing here. In case people are wondering why we're imposing some of these things, why we're doing encouragement, why we're going the direction, we do mean well. We're not some faceless that's just over there trying to make things difficult for everyone or complicated for everyone. We mean well. We know what's needed to be done, and we're trying to get things done within the mandates that we have. So I hope that the general public understand that. And on that point, please work with us. Please try to cooperate and see what you can do with us. We honestly mean well, no? I hope that's one key message you can get across on this point when it comes to the regulators. No, thank you.
No, Commissioner Lee, definitely. I think the regulators facilitate for everyone to come on board. But on this side of this table, less encouraged, more mandatory would be great. Jonathan.
Selena, well, maybe I'll make one comment on the third point you raised, which we haven't touched on, domestic currencies. And there's a data provider out there whose name I won't mention on a Climate Bonds Initiative webinar, who showed that in 2022, local currency sustainable debt issuance reached 8.5 billion, which was about 60–70% up on numbers in 21. So the efforts of, you know, Commissioner Lee and others to, you know, grow domestic markets on that metric are having some success. Now, I know probably if they went through the CBI assessment filters of do they meet our standards, maybe that number would reduce a bit, but I think at least it's an indicator of the trend. So I think that's positive news, particularly for ASEAN, because there are many businesses that need capital to transition, that need local currency funding, because otherwise they're going to be exposed to huge foreign exchange risks in their business that just doesn't make sense. So I think that's a positive. I think we should highlight in sort of summarizing for last year. And I think, you know, the other point I would make is encourage everyone listening on this to sort of engage in this topic. Whatever, if you're sitting a, you know, a corporate, you know, really start thinking about how you're dealing with the challenges and what dealing with it or not dealing with it is going to mean in terms of you getting good access to the funding that you need to support your business. Yes, we will need some sticks around some mandatory, you know, mandatory rules and regulations. Of course, they have a role, but fundamentally, I think from both the, you know, the issuer or lender side and the borrower and investor side, it's critical just to think about the fundamentals that good sustainability performance is going to lead to good financial performance. And that's absolutely where we are, both in terms of, you know, avoidance of the risks and taking the advantages when we look at just the rate and speed of growth in across all of the new economy sectors. And that's the fundamental drive I think I would encourage people to focus on.
Thank you very much, Jonathan. That is very true. I'd like to thank all three of you for being such a lovely panel. Before I close, I would like to thank HSBC for supporting us in issuing this report yet again for another year. And thank you so much for facilitating this webinar, enabling us to bring it to the audience. Thank you very much, gentlemen. Have a good morning, good afternoon. Take care.
Thank you to you.
Thank you.
Bye.